All right, Bulls and Bears, back with another dose. We have some very strange things happening with credit card and banks issuing credit cards. In fact, they're actually closing people's accounts for something called credit cycling, and they also are closing people's accounts for not using their credit card. You probably had a card closed for that if you've had a credit card at some point. If you don't use it for a while, they'll close it, usually after a few years. I had one just closed recently for no transactions in 2 years. All right, but this next story is going to be very interesting because most people think that you should pay your card off in full, which you should to avoid interest. But credit card companies are choosing to close some people's accounts here. But first, let's talk about the profits. Credit card companies raking in massive profits. I mean, take a look at this. Recent headlines: record credit card spending helps American Express top revenue estimates. American Express record second quarter revenue. Swipe fees are being increased, so credit card companies are making more off of each credit card swipe. And some people and merchants are demanding reform because now they're having to pay these fees to the credit card companies. And some of them are even passing the fees along to their customer. Example, I went to pay my car insurance a few weeks ago. And they said, okay, if you want to use a credit card, there's this extra fee. I think it was like 3%. And I was going to use my credit card to get points, but two, because I don't want to use my banking account information, because if your bank account information gets compromised, then they're going to drain your account. So I would much rather have somebody take my credit card number and get my credit card and use that versus getting my checking account. But to use my checking account, it was going to be more risky, but that's the only way I could have avoided the 3% fee. And it was like $1,000 annual bill, so it would have been like $30 fee just for using a credit card. So I went ahead and used my checking account. But the point is, credit cards are finding more ways to make more money. And that's why we're seeing these record profits, of course, record spending, higher interest rates, people paying more interest on their balances. Hopefully that's not you. Hopefully you're paying your balances in full each month. Also, we have default levels, the highest. We saw that at the end of 2024. We're going to see the numbers here for halfway point through 2025. And I think it's likely going to be on pace to break the 2024 record. But let's hear from a few people that are getting their credit cards closed because of what's called credit cycling. And we're going to get to the bottom of it here for you too and tell you what it's about and how to avoid it.
So let me get this straight. Capital One is closing people's accounts for credit cycling. They're closing your account for what they call credit cycling. I'm so confused. So basically, if you purchase something and you pay it off, and then you purchase something again and you pay it off, they're considering that to be credit cycling, and then they're going to close your account.
Sounds weird, right? So people are reporting their accounts getting closed, and the credit card companies are calling it credit cycling, right? We're going to get to the bottom of it. We're going to tell you what they mean by it. But a lot of people are coming to the conclusion that the card companies don't like you paying off your balance in full, and they want to make interest on your transactions. So paying it in full, they're assuming, or they're thinking, some people are assuming that that's the reason why companies are closing their credit cards. But take a listen to a few people giving their take on it, and we're going to get to the nitty-gritty of it here for you.
That's insane to me. I thought that's what they've always wanted you to do with your credit cards. Pay off the balance. So Capital One is going to close your account because you're doing exactly that, and they're calling it credit cycling. That's a darn shame. What it is, in my opinion, they're not getting the interest. They're not getting interest payments. So without interest, they're not making money. So what they're doing is just closing your account because you're paying off your credit card. Please make this make sense, Capital One. Credit cycling. Make it make sense.
Make it make sense, right? Good question. I had the same exact reaction as him. I thought it was completely about not making money, and I still am suspecting that. But there's some more details about credit cycling that we want to look at here real quick. And let me just bring up some information here. This is just going to be Google AI results here. Credit card cycling, repeatedly maxing out and paying down a credit card within the same billing cycle. So not just paying off your balance in full, but maxing it out, paying it off, running it up again. But in total, you're running up more than your credit limit. So you have a $7,000 limit. You go spend $5,000 on a cruise, you pay it off in full. 2 weeks later, you go spend another $5,000 buying maybe a used car, whatever. You pay that off in full. So you've used $10,000 worth of credit, but you only have a $7,000 worth of credit limit. Even though you paid it off in full, the credit card company's looking at it as you are spending more than your credit limit, even though you paid it off, which is crazy because the credit card companies, they're making money on the transaction. They're making money on swipe fees. So why are they closing the cards? Well, this can lead to account closure and negative impacts on your credit score. Crazy, right? Banks may perceive this behavior as risky, potentially triggering internal flags and prompting actions like account closure or forfeiture of awards. That's another thing. People are losing awards and points that they've accumulated, sometimes over years, that they never used. And so my tip would be use your points every month. I mean, cash them in, even if it's just a few dollars. Some people want to just keep the points on file or keep the points accumulating to buy something big, but then you're risking just losing your points. If you read the contract of the credit card, they're not going to go ahead and reimburse you for your points if they close your card. Most cards that I've seen, I've never seen one say they would still give you the points or pay you out cash if they close your card. I've never seen that. So read your contract, which most people don't. But if you have a card, you're concerned about that, read it. But the easiest way is just to use your points at least every couple months, cash them in. Don't let a whole bunch of points accumulate and you risk losing them. Now with more risk out there, credit card cycling. So it's pretty interesting. Let's hear from a few other people though on what their experience was with getting their cards closed and actually losing points. By the way, the first gentleman was AliBubs09. AliBubs09, thank you for putting that video out and giving us your thoughts. All right, here's another one. 260,000 credit card points lost. Take a listen. This is crazy.
I lost 260,000 credit card points.
Was just sent to me. The reason why American Express closed your complete card down, even though you specifically had perfect payment history with them, is a very simple reason. And that is because American Express looks at your overall credit report in general. Chase Bank and American Express are the two largest banks in the United States. And they are going to look and see what's your debt to income ratio.
All right, this guy calls himself Chase the credit expert, but at the beginning,
American Express just shut down.
This guy talks about losing his points.
Just shut down my credit card. So American Express just shut down my credit card, and I lost 260,000 credit card.
The audio is low. What he said was American Express just shut down my credit card.
The reason why American Express.
Sorry.
Just shut down.
He said American Express just shut down my credit card, and he lost 260,000 points. Oh, that's a heartbreaker there. So this credit card expert guy, Chase the credit card expert,
ratio, how are you?
Is saying what we talked about a few minutes ago, that it shows risk. I still think, though, there's a profit component behind it. Now, just to be fair, though, I have Capital One, and I've paid my card off in full every month for years. I can't even count, maybe 8-9 years, right? I've had the card for a long time. No threats of getting my card closed down, and I paid it off in full each month. But I've never, in 1 month, I've never used my entire limit. So there's like a $10,500 limit. I think the most I've had in 1 month is maybe $2,000 or $3,000. So what I think it is running up more, even though you're paying it off, running up more total purchases than you have in credit, like the example we gave earlier. And it's probably just an algorithm that just detects a number and a number of purchases that you've made within a month, and it's comparing it to your credit limit. Even though you're paying it off, it just sees the purchases, and it's probably just an algorithm that's triggering the company to close your card down. Now, you may be able to call, get somebody on the phone and explain it, and maybe they can reverse it, but just be safe. Just use your points, and maybe use different credit cards instead of making big purchases on one card if you're worried about getting your card closed down. Now, I've got a couple other cards that got closed down for non-usage, but I've got like 12 credit card accounts. So one or two closing down really doesn't affect me, even though it can impact your credit score. From what I understand, though, if you get your card closed down for non-usage, it's not supposed to impact your credit score negatively. Maybe it does, but I'm really not worried about it too much. All right, folks, there's a lot of people out there talking about it. Here's what this gentleman says.
It's not just Capital One that's closing people credit card accounts right now. It's also Chase, Credit One, Synchrony Bank, and also Community Bank too. And this is all because of credit cycling, y'all. This is freaking ridiculous. So if you do have those accounts, be on the lookout to see if your account get removed or get closed ASAP.
All right, he's citing Capital One with a bunch of other credit cards. The one I've seen the most mentioned the most is Capital One. That was the screen name Mr. Pace Yourself. That was the last person we just heard from. Folks, credit card companies are making record profits for the most part, not all of them. We just saw American Express. We're going to see the other ones come out for the second quarter here very soon. And my sense is, and my guess is, that it's going to be more record profits. They're increasing their swipe fees. The people that aren't paying their debts off every month, they're not paying off their balances, are paying enormous interest charges. 20+% still is the average credit card interest rate. Rates are not coming down. So cards are just going to find more ways to make money. If they stop making money in interest, they're just going to raise the swipe fees. And it's just going to go on and on and on. So how can you protect yourself in this situation? Well, yes, pay off your full and balance in full each month. Continue to make your payments on time, obviously. But getting your card shut down for credit cycling, just use different cards if you're concerned about that. Because if you only have one or two cards, and then you get one shut down, and all of a sudden your total available credit goes from $20,000 to $10,000 because you only had two cards, then you might be in trouble and your credit score might take a pretty big hit. So if you're worried about your credit score, then be careful with that and maybe try to use different cards. And even if you don't intend to use other cards, maybe just open one up and have a few extra card accounts open to just have available if needed. And maybe you can just use different cards to make purchases, especially if you have large purchases, and that way you're not going to get dinged for credit cycling. All right, this is Carly DIY. She's going to break it down for you. Pretty much what I said, but she's going to say it probably more, she's going to phrase it differently.
And I'll pay it off like a couple days later. I treat my credit card like a debit card. Now I've gotten tagged in a few videos of people credit cycling and say, oh, if you do it the way I'm doing it, if you pay it off multiple times a month, then you can get your card closed. And that's like what other people have been experiencing. And credit cycling, I did look it up, and it is different than what I'm doing. I'm not going over my limit any month. I have a 5,000 limit and like a 7,000 limit on my cards, and I have never gone over either of those. So basically it's saying that, like, let's say I booked 4 flights for my family of 4 to Thailand, and it was $5,000 even. I'm going to put it on my card so I can get the points, right? So I book the flights, put it on my card, and then I transfer from my savings account. I pay off my credit card, and then I'm like, oh, a couple days later, I'm like, oh, I'm going to book our hotel now with that same card, and I'm going to put $1,000 on that card. Then that's credit cycling. Even though I paid that off, I now have used $6,000 worth of credit on that credit card within one billing cycle. And they haven't allotted me that. They've only allotted me $5,000, even though I paid off the other $5,000 and I should be good.
Just like I explained it, right?
In one billing cycle, you are not supposed to use more than your credit limit from that bank. Then the bank will be like, no, we're only giving $5,000 of risk to you. You've used $6,000 of our risk this month, and while yes, you paid it off, that's still more risk than we were going to take on, and I'm sure in your terms and conditions it says that. So don't go over that limit. I will say I'm glad this was brought to my attention, because I guess I didn't really realize that was a thing. So I use my credit card for.
There you go. So people, what do you think about this? Let me know what you think down in comments. There's no law, there's no rule or regulation that says credit card companies have to give you credit. They can close your card down. They have the right to refuse business. I'm sure you've seen a sign if you've ever been to a business, and probably you've seen it multiple businesses, signs that say we have the right to refuse service, right? Now, they can't discriminate against you for certain things, but they have the right to refuse service. Credit cards can close your account down if they detect that you're just spending too much, if you're not spending enough. because they're not making enough money, they can close it down, folks. So either way, what do you think about this? Please let me know down in the comments. Be cautious, be careful out there. As always, keep stacking. Big love. Bye for now. Peace.